Hello, YouTube. The S&P has now printed a weekly lower low, but it is not actually resting below it as I'm recording this video, which means as of right now, that is a failed breakdown. It broke down, but it failed to hold the range. This is not looking great just because on our daily chart here, we looked at this yesterday, we were at risk of losing our uptrend, which we did. And we now have a doji, but the gap is not filled on the daily. So that is a really big question for me. If we don't actually fill that gap, it tells me a lot. If we fill the gap and then watch for the reaction, again, what's going to happen on the reaction, that also tells me a lot because the same thing is happening here on QQQ. We are resting on the W area, which means if we lose this uptrend, the W does not look as likely anymore. So it's really important we're aware of what's happening. There's still also a gap here on QQQ on the one-day chart. And the easiest way to try to explain this, we will get at in a couple of minutes. Let's look at the headlines that crossed today. What do we have? Well, Volmageddon with OPEX in focus today. 50% of all contracts are traded 0 days to expiry, which just means that there is a lot of volatility. James Bullard yesterday said he was open to a half-point rate hike at the next meeting. Again, this guy does not vote this year, but what he says matters and people pay attention. Officials seeks Fed funds rate at 5.375 as soon as possible. Advocated for a 50 basis point hike at last meeting. What happened as a fallout? Well, Fed swaps fully priced in 25 basis point hikes in March and in May for both. And then we got Goldman Sachs and B of A expect 3 more US rate hikes, taking us all the way to June. So Goldman Sachs, B of A see Fed extending hikes into June. Jobs revision points to a stronger labor market momentum. Changes follow stronger inflation and unemployment data. Let's look at a few more charts, and then we're going to wait and go over the rest on our weekend deep dive. If you're enjoying the video, I would really appreciate if you could consider subscribing to the channel, and please smash that thumbs up if you are enjoying the content. Thank you so much. All right, I think the best place to start is going to be here on the weekly chart, and we're going to look at QQQ, then SPY. Might not realize it, but QQQ is actually green on the week right now. By how much? By 26 cents or 0.1%. It's not a lot, but it is technically green. Here's where it gets challenging. And the reason why I say it gets challenging is because if you watched our weekend deep dive where we talk about the turning point, well, there is no turning point. If we flip this to a line chart, it's going to look like a whole bunch of nothing happened. Yeah, we're flattening out. So we're flattening out over the 50 moving average, and it's to be determined. I'm not sure which way we're going to go. And it's okay to say you don't know where you're going to go. Why? That means you have a healthy appreciation for the market and you've been humbled enough times to know when you have high conviction and when you don't. And if you don't have high conviction, you got to wait for the break. What do I mean? You have to wait for the inside bar to break. We now have 2 inside bars on QQQ. So until we actually take out the low and then reject off of it with at least one more candle, we have to say that the bulls are holding us over the 50 moving average. Our low of the week is 20 cents below our 50 moving average at 298.56. I would say that's bullish. Here's what's not bullish. What's not bullish is that we have the exact opposite happening here on 3 candles now that we had at the bottom. Why? Lower wicks meant that there was dip buying happening. So what do upper wicks mean? Well, upper wicks mean selling, selling, selling. So if sellers are being found and we're approaching a key support area, we just have to look and see whether or not it's going to hold. And this level at 298 to 299 is particularly important when we have a look at QQQ, as we did on the weekend. Why? Well, because once we fall under 299, the risk reward skews significantly bearish. For the monthly chart to get momentum into the end of the month, because we're now about halfway through, we pretty much have to close a weekly below here. So we're going to be streaming for the final hour. Come hang out with us if you want to see what we're doing. We look over here to the S&P. This is where it's a little bit less bullish. Why? Because we have those same upper wicks as we had on the bottom. We now have a lower high and a lower low, which means we actually broke our inside bar bearish. So if we go back below 405.01 or last week's low on a closing basis, that does not look good at all. Maybe we don't fill that daily gap and we just fade back down or crash land on our 50 MA, as we pointed out before. Here's the pattern again really fast. We're over the 50 MA after a golden cross, and we're looking for a power slam back down to the 50 DMA and the 200 DMA. What's our template? The Dow. So for the Dow here, what we were looking at was our pattern where, again, we're going sideways. We can't hold it. Power slam to the 50. Well, as we now get further and further down here, the MAs are curling up, which means that mid 390s to 400 should now be strong support. It's only about another, I don't know, like 10 points from where we are right now. But here is what's getting different. I noted this in our private group. And yes, if you watch the free videos, you get lots of value. Where do you get the most value? By joining us. And you can trade with me, Justin from YouTube, for 14 days for free. So if that interests you, I would consider clicking on the link in the description or thealgo.com to trade with me to see how I make these videos, but more importantly, what trades I make to try and make money. I crushed it this week. So if you're looking for someone to try to learn from, maybe you want to join me for 14 free days. And if we deliver value, stick around. If we don't, no hard feelings. Quit, leave, watch the videos for free on YouTube. All right, here we go. Looking at S&P on the monthly chart, we have a 1 to 3 risk reward if we're under 409. Where are we? Well, we're under 409. So what does that mean? Monthly failed breakout. We broke out, but we're failing to hold it. So we have a weekly failed breakdown versus a monthly failed breakout. Man, this is getting confusing. Exactly. This is confusing. Let's make it a little bit more simple. We're focusing on the red line and the pink line, as we've noted before. Let's now look back at our 15-minute chart. Why? Because this tells me a lot here. We're now below the option implied move going into Friday for the bears at 408. And as I alluded to, I think yesterday, we had a bullish pattern, which is an inverse head and shoulders. But by closing at the low, there was pressure building up. Volume ramped in. What happened? We flushed down. We got a nice little attempt to go back up today. Hit about 407. Not quite a gap fill, though. And what's interesting to me is just that where we're actually finding resistance is on that weekly low at 401. What does that mean? If we close below here, that's what I just told you is going to be the bear catalyst for me. If on the flip side, we can start reversing and shoot back up, I'm watching for 408 and 410. So if you've enjoyed today's video, I would appreciate a thumbs up. If not, the weekend video should now be queued up over here in the left-hand side. And if you want to watch the final hour from me, with me, to see exactly how we close and shake out, you can join us by going to our channel and clicking on the live video or the live stream. Thank you so much. I look forward to seeing you on the next video. Thank you.